Got a new client the other day and they're about to move to Australia and they were talking about, hey, I know Australia sucks for international investments. What structure do we use? We're going to stay there about 3 years, educate our kids, and then we're going to yeet ourselves back to the UAE and never see you again. The standard advice for people is to chuck it in family trusts. Family trusts are like Jesus for Australian tax law. Unless you are going to be a foreign tax resident in future, in which case Australian trusts are the devil. But also foreign trusts, or offshore trusts as they're called, to make them sound really nefarious, have really big tax problems for Australian beneficiaries. So it's like, do we have an Australian trust and just live with the really bad long-term tax consequences? Or do we get a foreign/offshore trust and live with short-term bad tax consequences here, but long-term good? And we actually got into a short-term, moderate, long-term good outcome here, and I'll tell you how we did it. So this guy has family members overseas, and I said, look, we can set up this trust, chuck all your investments in there, cut yourself off from this trust absolutely in the trust deed while you are an Australian tax resident, and make sure that you have enough to sustain yourself. So you've got income, and he made some salary from the family business, which was overseas. That was taxable in Australia. He was going to receive some other amounts, all going to be taxable in Australia, and he might buy some property in his own name. I said we have to prepare for this. So chucking it in the foreign trust before you come here is absolutely critical. And you might say, look at this dodgy Australian tax lawyer setting up foreign and offshore trusts. But they have their uses. And while this guy was in Australia, I told him straight, it's going to be shit. It's going to be bad outcomes for you unless you can fully cut yourself off from this trust. And we are going to keep crazy level of evidence to show that we have no influence on this trust. We've given it to one of the financial controllers of the family business, and we said, you cannot take instructions from us. We will not be involved in any decision making. Mate, I don't even want to hear about this trust after we give this advice. Until old mates goes back overseas, and then he can start to enjoy the benefits of this family trust. Or at least that's the plan. But the moral of the story is, if I was to stick him into the standard trust structure that every person will recommend at drop of a hat, he would have had a really bad long-term outcome and frankly probably would have sued me. So there are very few out-of-the-box perfect solutions. There are some structures that are going to work for 90, 95% even, but for those 5%, you need to have the chops to go, that isn't going to work. I know what will. I can, on the fly, figure out what are these risks, which ones do you want to live with, which ones can you not live with, and just find the answer. And even if it's not perfect, it's the best that we can do.